green all round. Dow pointing to a positive start. We've got Asia in the green, and of course the local bourse is benefiting from all this positive sentiment. Let's just take a step back and look at all the negativity that came through from the Dubai saga. Rob, do you think that perhaps it's only going to be contained in that region, and our equity market is of course safe from any losses that we'll be seeing in that region?
Well, it looks like that it has been contained in the Dubai area and the Arab Emirates area. We see Dubai given not really supporting Dubai World, but there is money coming in from Abu Dhabi. So I think it is contained in that area, and we'll just have to wait and see over the next few weeks if it is contained there. But I think it has. I think you can see by the markets recovering very quickly after that scare that most analysts and most people in the markets do believe that it is contained just in that environment.
For the month of November, the Dow Jones gained 6.5%. It's 5 months of gains for the US markets, and we see them performing quite well. Going forward from here, Rob, do you think that we could see a similar trend emerging, or are you really relatively concerned about what we'll be seeing coming through from the retailers for the month of December? Because of course all the focus is on the consumer and whether they'll be shopping this month.
I think if we take a look at the first weekend of shopping in the States, the volumes were very good and positive to see that people were out shopping, but the value that they were spending was much smaller. So the amount that they're spending is much smaller, and that is a slight worry for the American economy, and we have to wait and see if there's going to be continued buying throughout the holiday season. The consumer in America makes up 70% of the GDP, so it's very important over the next month to see how much they spend and if they are going to be buying throughout the whole of December or just at certain periods, like just over the Christmas period. So we have to wait and see. I think that the markets have done 5 months consecutive in a row up, and I don't think there's anything that's going to pull them down. Dubai gave us a scare, but yet the market still recovered quite quickly after that.
There's mixed views out there, and of course that comes from the mixed economic data that we've been seeing. India growing over 7%. We saw the Chinese PMI still around that 55 level. On the other front, locally, our PMI just breached 50, which is very important in terms of growth for the manufacturing sector. On the other end, we've got things like the Baltic Dry Index coming under significant pressure. Credit default swaps also on the rise, showing that insurance for debt is of course rising as well. So showing that there is a little bit of risk in the markets. How do you read all of this and then decide on a strategy for investment? Shouldn't there still be a little bit of caution going forward?
I think there definitely needs some caution in markets like this, and I think you can see it in the amount of volumes that are traded on the stock exchange currently. We have been moving up consistently over the last few weeks, but it has been on relatively thin volume, and obviously when that volume comes back, it shows more consistency and more direction and confidence in the direction. So I think one of the things to look at is how much volume is coming into the markets, and currently we're still under normal volumes on the exchanges worldwide. So I think there is some risk that you have to look at. I think you could see that when Dubai did give that announcement last week, the markets fell back 3, 4, 5% in a day, and there was high volume over those days. So when the volume comes in on the selling side, you can see that the markets move very, very aggressively. So you have to still show caution in the markets currently.
Rob, we've also got gold very close to $1,200 an ounce, and we were talking a little earlier and we saw it hit $1,197 an ounce. We've seen the dollar really losing ground against the euro, currently at 150. Commodity prices are enjoying gains on the back of this. What do you think is going to push gold even higher from these levels?
I think the US dollar future touched above 1,200, which is quite impressive, and a new high again on gold. And I think it just shows you that there is still people are worried about risk, and that's why this gold price is moving up still. We see China as well as India saying with this Dubai story last week that they might look at gold again and increase their reserves in gold, and I think that's pushing it up. I think inflation is not too much of a worry. From the American side, they're still happy to keep interest rates very, very low at the moment, and I think those interest rates will stay low in a weak dollar, so gold will also stay very strong. But I think secondly, people are going to take it as a reserve currency, so I think that's what will push it from 1,200 to 1,300 if possible.
Locally, we've had quite a lot of companies coming out and saying that the environment in South Africa still will remain relatively subdued going forward from here. Imperial came out with an update saying that it is concerned about the trading environment going forward from here. When you look at a company like Imperial, are you relatively concerned that the South African economy still has a long way to go before we see a sustainable recovery?
Well, I do. I see our PMI number come out at above 50, which is very positive and good for looking forward. I do think that locally we're still under pressure, and I think that the amount of tourists that are going to come in for a company like Imperial for the 2010 World Cup is very important for them, and how much money flow is going to come into South Africa over that period. I think they've done a lot of cost cutting, which has helped in a very difficult environment. I think going forward Imperial look relatively solid, but our economy is still very slow, and it is recovering slower than a lot of the other economies around the world currently, and we are lagging. So I think you do have to show a bit of caution, but I think that if you look for a company with a strong balance sheet going forward, even in difficult times, they should pull through, and there'll be good growth into the second half of next year.